Joining me now is Wolf Wiese. He's the CEO of Golden Dawn Minerals. It's traded on the TSX Venture Exchange. The symbol is GOM. Welcome.
Thank you for having me.
Well, it's a pleasure to have you. What's Golden Dawn Minerals all about?
Well, we're an exploration company. We're with a large land package in south central British Columbia, Canada. We have what we call the Greenwood Project and the Atwood Project. The Greenwood Project consists of about 3,000 hectares. I guess about 7,500 acres in American terms, on which we are looking at two targets. One target is a bulk tonnage low-grade target, and we've drilled about 6,000 meters in the last year, since last November actually, and have delineated our first resource of about 400,000 ounces. And we are currently drilling south of that property over some narrow high-grade veins. There's a mine, an existing mine there, and an existing mill and tailings pond, and we have some Peruvian interests in that particular property. These are Peruvian contract miners that would like to come up and mine that mine, because we don't have miners in Canada anymore that are capable of successfully mining narrow high-grade veins. And these Peruvian guys are coming up, and they want to earn 50% interest in that particular piece of property and mine it, and then we would split the profits, which would be very good for us, because we wouldn't have to go back to the market to replenish our treasury all the time and dilute ourselves anymore.
Can you quantify what you have in the ground and what that value is?
Yeah, well, on the north side, as I said, we're at about 5 million ounces of low grade, and it has to cross a threshold of at least 1.5 million ounces before a low grade deposit such as that is economically viable, because it has to be viable at $1,200 gold too. And on the south side, as I said, there is a bunch of veins. We think that there is between 100 and 300,000 tons of rock that contains in situ value of about $800 to $900. And you know, if we were to mine it, we're not miners, we don't have the expertise, as I said, and we have a Peruvian company called Lichtfield Group that will finance the refurbishing of the mill, the mine, and everything, and in turn will receive 50% of the property and its cash flow. We project the cash flow right now, and that's only a projection, to be about $12 million a year. So that's not a lot of money. It's not going to get a lot of people really excited, but it helps us. $6 million a year for us is a lot of money, because that's $6 million less that we have to dilute ourselves with.
How do you rate the quality of what you're drilling for in terms of grade?
Which one are you talking about?
Both.
Both. Well, the grades are, as I said, are low. The grades are about 0.5 gram. And some copper. There's copper credits, maybe 4 pounds of copper per ton. The comparison would be, there's a couple of really good comparisons, would be Kinross's Fort Knox mine up in Fairbanks, Alaska, and they're mining 4.43 grams per ton and producing a troy ounce at $550, and that's with a mill of about 50,000 ton a day, throughput of 50,000 ton a day. That's what it would require on our property, and we certainly won't be doing that. We're not miners. We would be selling that to someone like Kinross or Teck or whatever.
What drives you to adopt a business model as opposed to, say, going into late-stage mines where you're close to mine to market, or heading up in the other end?
Well, the entry level is very high. There are hardly any really good gold prospects around. They've all been staked. In Canada, we have a staking system. In British Columbia, online staking, and you hardly find a square inch of ground that hasn't been staked. And then if you get into a situation where there is a resource, a drilled out resource, then you pay a very high price for it if you can find it. we've been there. I was very lucky to be able to assemble our land position through a friend of mine who's been up there for 40 years, and we've had a long-term friendship, and he knows. He was looking for somebody that was a capable promoter and being able to do something with the property, and I got it a year and a half ago for the company. Got rid of all of our other moose pasture and started drilling up there and doing surveys of geochemical surveys, IP surveys, and Titan 24 survey, which is the latest technology, very expensive. And we've really moved his property forward, because at the end of the day, the property owner wants to see his NSR, which is a net smelter royalty. And well, I think that with the bulk tonnage low grade, it's a 5-year window before you can think about a mine. With the high grade narrow veins, we'll be in that mine. We're just re-permitting it now. That means we have to bring the adits up to current levels of safety that hasn't been mined since the early 80s. So we'll be in there by mid-August.
How do you look at financing over the long run and how you can sustain yourself?
Well, I'm always financing the company, you know. I mean, right now we're trading at less than $10 million market cap, which is a joke. But normally, for a resource, you know, the market usually gives you $100 an ounce, but it's not doing that right now.